Hey EV investors, get ready for some thrilling news about NIO. The Chinese EV company has been rocking the EV industry with its current stock price at $8, making everyone turn their heads. But hold on to your seats because things are getting intense. Some worries have lately been creeping up among investors, questioning NIO's performance and future outlook. And now, with the highly anticipated earnings report just around the corner, scheduled for June 9th, the excitement is reaching its peak. Investors are on the edge of their seats, eagerly waiting to unlock the secrets of NIO's financial prowess and overall well-being. So, let's buckle up and dive into what to expect from NIO's upcoming earnings report and the concerns keeping investors up at night. NIO has been gaining a lot of attention lately. They've been doing exceptionally well in the EV market, as shown by their impressive recent deliveries. In April 2023, NIO experienced a remarkable 31.2% increase in vehicle deliveries compared to the previous year. This clearly demonstrates their ability to attract customers and sustain their growth. However, despite its positive performance, NIO's stock has had a tough year, with a 14% decline so far. This decline doesn't align with the company's delivery success, which is concerning for investors. And so, it's important to take a closer look at NIO's overall financial situation and the dynamics of the market to understand why this discrepancy exists. NIO's got a big day coming up on June 9th. That's when they'll release their earnings report for the first quarter of 2023. It's a crucial document for investors, giving them a peek into how the company's been doing financially. Here's the thing, the experts on Wall Street are expecting NIO's earnings per share, or EPS, to be around -21 cents for Q1 2023. That means they haven't quite hit profitability yet. But here's what you need to know. NIO's been putting a lot of money into research, development, expansion, and infrastructure. And that's had an impact on their bottom line. Still, some analysts see a silver lining. They believe that NIO will start making a profit by 2026. NIO's market share keeps growing, and there's a huge demand for electric vehicles. If they can turn things around, it'll be a major win for NIO, showing that their business model has serious potential in the long run. So, you can bet that investors will keep a close eye on that earnings report. They want to see how NIO's doing, what the market looks like, and if there are any signs of future growth. NIO is also facing a tough challenge due to the rising competition in the electric vehicle market. Big names like Nissan, Volkswagen, Mercedes-Benz, and BYD have recently introduced their own EVs, intensifying the battle in the industry. These newcomers, especially BYD, with its strong presence in China, could seriously threaten NIO's market share. To make matters worse, NIO is also feeling the heat from Tesla's price cuts on their high-end EVs. Tesla has slashed prices by 16% to 23% since the start of the year, which might impact NIO's vehicle sales. Interestingly, NIO has decided not to follow suit by reducing its own prices, adding even more pressure to its sales performance. Moreover, NIO faces a concerning issue with its shrinking gross margin. In 2022, their gross margin plummeted to 10% from 18% in 2021. This drop hints at mounting cost pressures and possible hurdles in maintaining profitability. Adding to the challenge, NIO lacks strong competitive advantages compared to other leading electric vehicle companies like Tesla, Li Auto, and XPeng. Tesla's superchargers, for example, allow drivers to gain 250 kilometers of range in just 15 minutes, potentially undermining NIO's battery swapping system. Meanwhile, Li Auto, an EV startup from China, is reportedly introducing an 800-volt fast charging system that offers 400 kilometers of range with just a 10-minute charge, giving them another edge over the competition. When it comes to self-driving cars, NIO's Level 2 autonomy isn't considered as cutting-edge as its rivals. Mercedes has introduced Level 3 autonomy in the United States, and XPeng is on the verge of reaching Level 3 autonomy, which could put them at the forefront of this technology. But before we continue, we want to thank you for watching this far. NIO's revenue growth hasn't kept up with other companies, so its price-to-sales ratio is relatively low. Despite strong deliveries and a 31.2% increase in April 2023, NIO's overall performance is down 14% this year. The company still hasn't made a profit, and analysts predict it will stay that way for a while. Wall Street expects NIO's earnings per share, or EPS, for Q1 2023 to be -21 cents. This lack of profitability has affected investors' feelings about the stock and made people wary about its future. JP Morgan is also worried about NIO's profit and the tough competition it's up against. NIO's profit margin went down from 18% to 10% in 2022, showing that making money is getting harder. On top of that, NIO has more rivals in the electric vehicle market. Nissan, Volkswagen, Mercedes-Benz, and BYD have all introduced their own EVs, which could give NIO a hard time. And to make matters worse, Tesla has slashed prices on their fancy EVs, which might affect NIO's vehicle sales. NIO doesn't plan to lower its prices, adding to JP Morgan's concerns about its profit and the intense competition they're facing. So, to recap, NIO is facing multiple issues when it comes to its performance and competition. While they've recently had strong deliveries, their stock has actually dropped by 14% this year. Investors are eagerly waiting for the first quarter earnings report, which is set to be released on June 9th. However, there are concerns about NIO's financial future as they haven't achieved profitability yet, and experts predict they'll remain unprofitable for a while. One major worry is the growing competition in the electric vehicle market. Competitors like Nissan, Volkswagen, Mercedes-Benz, and BYD have introduced their own EVs. On top of that, Tesla's price cuts on high-end EVs could affect NIO's vehicle sales. These factors raise doubts about NIO's ability to hold onto its market share and make a profit. Another concern is NIO's shrinking gross margin. This decrease is due to an intense price war in the Chinese EV market. Additionally, NIO lacks strong competitive advantages compared to other EV companies like Tesla, Li Auto, and XPeng. Considering these concerns, a negative outlook has emerged for NIO stock. Analysts predict that NIO will continue to report losses until 2025, and they estimate that the stock's price target in 2025 will be around $11. The company's limited target market, increased competition, pressure on margins, and unimpressive financial outlook all contribute to this pessimistic sentiment. As investors, keeping up with NIO's earnings report and market happenings is crucial. You'll gain valuable knowledge about its future potential by tracking how well the company is doing financially, keeping an eye on its competitors, and staying informed about its growth plans. Plus, don't forget to pay attention to what the market and experts are saying to make smart choices when it comes to investing in NIO stock. So, are you ready for its earnings report next month? And what are your thoughts on NIO? Let us know in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons down below. Now, if you want to know more about NIO, then make sure to click and watch this video right here and enjoy. And that's the end of this video, guys. See you next time.